Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week we're covering recent changes to the reinstated Medi-Cal asset limit. Master California's tax minefields, such as conformity issues, residency, community property, and apportionment at Spidell's Critical California Tax Issues webinar on August 26th. See the topics we'll be covering and register at spidell.com under webinars. The Medi-Cal asset test determines eligibility for various Medi-Cal programs. The asset test has been as low as $2,100 and was phased out in 2024, leaving only income as the financial criteria for Medi-Cal eligibility. The asset limit was reinstated in 2026 at an increased $130,000 threshold, plus $65,000 for each additional household member, meaning if countable assets are over $130,000 for a single person, the Medi-Cal application is denied. However, SB 164, which is effective July 1, 2027, lowers the Medi-Cal eligibility non-exempt property cap to $21,000 or $31,000 for households of two members, plus another $1,550 for each additional household member. This change will impact California residents who are age 65 or older, have a physical, mental, or developmental disability, live in a nursing home, or are in a family that makes too much money to qualify under federal tax rules. The reinstatement of the asset test does not impact the Medi-Cal eligibility rules for supplemental security income recipients, who still have to comply with the SSI asset limit rules, which are $2,000 for an individual and $3,000 for a couple. Individuals whom the asset test applies to will be required to provide information about assets they own when they apply for or renew their Medi-Cal benefits. The asset test reinstatement does not create new rules about which assets are counted or not counted. Assets that are not counted and will not affect eligibility include the individual's main home where they live, the individual's main vehicle, household items like furniture and clothing, and retirement funds if the individual is getting regular payments. Assets that are counted and therefore may affect eligibility include second homes, second vehicles, cash, and bank accounts. For most people, giving away or selling assets won't affect Medi-Cal eligibility. However, if a person moves into a nursing home, Medi-Cal will look at any assets they gave away in the 30 months before they entered the facility. This is called a look-back period. Assets transferred before January 1, 2026 will not be counted. Transfers made on or after January 1, 2026 may cause a penalty that delays long-term care coverage. Individuals can spend or give away countable assets to stay under the limit. This won't affect Medi-Cal eligibility in most cases. Individuals can use their money to buy certain things they need without causing a delay in coverage. Examples include paying medical bills, buying clothes or household items, paying rent or mortgage, paying for school, fixing their home, and paying their car loan or other debts. Stay up to date on California tax news with a subscription to Spidell's California Tax Letter. You can get details on this monthly publication and download a sample issue at spidell.com under Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.